And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie DeVasquez. So, this past 2 weeks without me making a podcast episode has been crazy nuts. I will attribute everything to bad timing as to why I haven't found the time to make another update as I am right now. From being bogged down with studying for midterms to emergency travel back home to Florida for spring break / coronaviruscation, I guess you can call it, I've been busy. I find it funny that the 2 weeks in which I'm the busiest I've ever been, one of the biggest economic downturns happen. For a market recap, I am neutral on Bitcoin for the time being. Based on current volatility of all markets, my neutral stance is bound to change in a matter of days. On the last episode of the podcast, I had a buy order for Bitcoin at 82.25, and I already bought 25% of my trading capital back at 8,500. At that time, I saw Bitcoin going down to 82.25 with a possibility of going as low as a 78.6% retracement of the move from 64.30 to 10,500 at 71.30. Now, as you might know, Bitcoin has plunged to a low of 38.50 and has stabilized around the 4,500 to 6,000 range. There are a mix of reasons as to why Bitcoin dumped so hard. There are two reasons I can list right here. The Plus Token Ponzi scam that operated throughout 2019, they moved Bitcoin and supposedly sold a large number of it, therefore dumping the price. As well as a mixture of coronavirus panic and the hunt for liquidity. On the fundamental side of this, Bitcoin is supposed to be a safe haven asset, but when mass panic due to a pandemic that we haven't seen before rises, people rush to get cash, so they end up selling everything they can, Bitcoin being one of them. In periods of uncertainty like the one we're in right now, safe haven assets like Bitcoin, gold, silver, etc. all end up correlating with the stock market because of people's desperate need for cash. In times of ultimate fear like the one that we are in right now, are also fundamentally the best times to buy. Also, fundamentally, Bitcoin's fixed supply of 21 million coins is a hedge against the unlimited liquidity and the Federal Reserve slashing rates to zero. So that is fundamentally bullish in itself. Now, getting into the technical analysis side of Bitcoin. Bitcoin has broken through my previous analysis of looking for a wave 2 from the high of 10,500. Since it has broken that analysis, we have to zoom out to look for another possible Elliott wave count. I have a Elliott wave count right here. This is my new software that I use, MotiveWave. A number of professionals use this. It automatically puts on Elliott wave counts for you and rates them on a scan. So you can see right here, if I was to click scan, it scans through all my charts of Bitcoin in this little thing, and then it scores it, and I can click on one of them and have a count right here. This is one of the last bullish counts that it can have technically without looking absolutely long-term bearish on Bitcoin. But this count is being held by a thread. So it all depends on what you classify as an invalidation of how this is hanging by a thread. If you classify invalidation as a daily bar that is closed below the invalidation point or a puncture of the invalidation point. As you can see here, Bitcoin is reaching the low of 38.50. Bitcoin reaching the low of 38.50 right here is below the 78.6% retracement. So let me pull up some Elliott wave. Oh no, I have the chart up here. No, that's not it. I'll just do it here. Go to Tools, Fibonacci retracement, snap to there, snap to there. As you can see, 78.6% retracement is at 43.44, and just barely it punctured that. But this on a weekly chart, and the daily chart, it punctured it as well, but it didn't close a daily candle below that point. So, since a daily candle has yet to close beneath that 78.6% retracement at 43.44, I'm going to say that the count is not yet invalidated and that this 1212 count still holds. Before I talk about the possible extensions of the next possible third wave right here, I will first go over the requirements for this view to be probable to hold. As long as a daily candle doesn't close beneath this 78.6% retracement at 43.44, this count is valid. If a daily candle closes below that point, then there's a higher probability that Bitcoin will retest the low of 38.50 of where it created in that one candle right there. If 38.50 is breached, then there is a higher probability that Bitcoin will retest the low of 31.22 that was made back in December 2018 over here. If that is breached, then all hell breaks loose, to be honest. That will be Armageddon for Bitcoin. People will not like that, and it will be crazy. Bitcoin has seen 90% retracements before and still gotten to where it is today. But 90% retracements are not fun to hold Bitcoin through. It's possible, but it's not fun to do. Now, if we hold this current range, which I expect to go sideways in this 4,500 to 6,000 range for some time, while everyone's uncertain, and we don't close a daily candle below 43.44, then we can expect a larger wave 3 target of 24,388 and 30. Let me delete this retracement. There you go. 24,388 and 33.29 for the next bigger wave 3. And that includes like the little 5 waves up from that bigger wave 2. But that is a projected new all-time high in a third wave, which is big, especially as now everyone is getting crazy about the new Bitcoin halving that's coming up in May, I think, or late April to May. I think it's coming up in. So anyways, yeah, a new all-time high may sound crazy after we just lost literally half the value of Bitcoin in the past week or so. But Bitcoin is a highly illiquid asset and can pump just as easy as it dumped 53% last week. I also want to point out, since the fundamentals of Bitcoin are so strong, as soon as Bitcoin ceases to correlate with the standard stock market, I would like to see some fireworks. There should be some fireworks, either downwards or upwards. I mean, that's a very generalized analysis, but I would assume it would be upwards. So, if you didn't understand the jargon I just threw around this entire episode, here's a quick summary of what I just said. Bitcoin's fundamentals are stronger than ever, existing in a time where U.S. interest rates are near zero, and U.S. dollars are being printed to no end. If Bitcoin closes a daily candle below 43.44, there's a stronger chance that it will go lower than higher. If it doesn't close a daily candle below that point, there's a stronger chance that it will go higher than lower. So, yeah, that's all for episode 20 of Better Than Bitcoin podcast. Don't forget to like the video and subscribe. Follow me on Twitter at Jamie Dabauskas, and peace out.